It's Jay Meisel here with the Forex Trading Outlook for October 8th and through the rest of the week. It's a follow-up to my weekend update and given what's happened in the stock market and bond market. Stocks plummeting, bond yields plummeting, the dollar coming into some modest pressure so far. A midweek update is certainly in order. Now, before I go on, Wednesday's offered a correction day. Whether this happens or not, we'll have to take a look. You got the FOMC minutes will be the highlight. The general expectation with the dollar would have been supported ahead of it, but given what's happened in stock market and falling bond yields, it may provide an opportunity if the dollar does blip up on it. Now, the reason I say that is those who follow me know I have something called, and I'm going to write it down, the Monday effect. This is a pattern. That's right. Pardon the writing here, but it's the Monday effect. This is one of my favorite patterns because when it happens, when it works out, it really does make for a big move. Oh, I forgot the D. How's that? Let's put the little D in there. Okay. Now, what Monday effect is when the high or low for especially in the euro dollar, I find it works the best. When the high or low is set on a Monday, especially early in the Far East, as it was with the euro dollar, I always mark it on my blotter because if the market starts to distance from itself from it, certainly in a market like this where the market's heavily short euro, you often see pressures build the other way, especially after we get late Wednesday, getting to Thursday or Friday. So we have to see late tomorrow and early Thursday whether we start seeing these retracement pressures build, and if that's the case, it might carry force through the weekend. We're coming into a week where we've had 12 weeks in a row of down euro dollar closes. It looks like there's a better than even chance that pattern will be broken this week, barring a reversal, and we've seen those happen more than enough occasions, but this one seems to be a little bit different because of what's going on in stocks right now and bonds, and with not much data, it's hard to see the market not going unsettled into the weekend, and a long weekend for that matter, with the U.S. closed on Monday. Now, so the Monday effect, you have to take a look after the FOMC minutes. We'll see how much pressure start to build. But if they start building for a correction, you could, further correction, you could see them build on Thursday and Friday. The market's well overdue for a correction. Make it go through charts. What I'm looking at here, the 4-hour. I've been mentioning this for a long time. You got the trend line here. Comes around 127, currently for about 35 or so, 38 on the, and then the 100 period moving average at 127.53. Those are, as far as I'm concerned, the key indicators, as they've kept my bias to be short as long as we're staying above it, below it. Now, otherwise we have 126.99 here is the first key level. We'll look at the 1 hour where the charts, the numbers are even clearer. And this is what you have to look at. We're above the 100, and we've moved over the 200 now. So you got to pay notice on that. We have levels at 126.99, 127.15, and around 127.62. We have R1 comes in at 127.12 with a daily pivot around 126.48. R2 at 127.46, R3 at 128.10 using pivot point resistance level. So the key levels are above 127, really between 127 figure to 50-60 are the key ones if this market is going to retrace and push higher. That is the risk at the moment. More stops closer to the top than the bottom, and I haven't said that in a long time. That the risk is there. So just keep that in mind. What happens tomorrow, be more aware what happens tomorrow afternoon late and what happens on Thursday and Friday, because if the retracements pressures are going to build, they're going to build on those days using my Monday effect. Well, that's it for now. As you can see, the market is one other pattern, by the way, and I'll mention one more time. Big figures, 126, 127 right now are the two big figures in focus. They've traded 12 out of 14 days. This used to be a pattern that was 90% a big figure would trade. A big figure is a round number. It traded 12 out of 14 days. One of those days was 126.99. So really, you can make it 13 out of the past 14 days a big figure is traded. So use your imagination which one's more at risk. If this pattern is continue on Wednesday, just be aware of that. So to sum up, I'm bearish on the euro down the road, but for the moment, I've stepped aside for the first time probably since middle of July, and I'm going to let this unfold and see if this retracement goes further, because that is the risk right now. And watch your Monday effect. Also, one more thing. Look at the bottom here. I posted this on Monday. I'm not sure the link came through. I call breaking news. A leading Forex broker has significantly cut its spreads and changed its pricing model. I've written an article, Why Spreads Matter. I suggest you read it. It is very revealing and it's very compelling news. So just click on this link, it's embedded in here, and read on. So good luck and good trading. We'll put this up for the moment and then we'll come back down again. Okay, that's it. Good luck and good trading.